The Exit Series is produced for general information and educational purposes only and is not investment, legal, or tax advice. Views expressed are those of the host and the guest and do not necessarily reflect those of any affiliated firm. The host is associated with an SEC-registered investment advisor. Nothing herein constitutes an offer or solicitation of advisory services. Guests are not necessarily clients. This is the Exit Series. I'm Bob Roark. This is for founders, brokers, and attorneys, the people who were in the room when the deal closed, talking about what happened next. This is the conversation nobody else is having. In this episode of the Exit Series, my guest is Aaron McCambridge. He's the managing director of Citadel Advisory Group in Loveland, Colorado. Aaron, you're in Loveland. I'm in Colorado Springs. We're both watching the same Colorado lower middle market exits roll through: industrial services, lumber and building materials, transportation, and all things blue collar. Those are the real businesses with real operators, the kind of seller where the company isn't an asset, it's their adult life. Aaron, you've been doing this for quite some time. Tell us a bit about your company and who your ideal clients are.
You bet. Well, thanks for having me, first of all. So Citadel, founded in 2002. I've been part of the firm for 15 years, as well as my business partner, about the same amount of time. As you said, we focus primarily on industrial services, services as a whole, transportation, lumber, building materials, and like I said, all things blue collar. So really, we kind of focus on, meat and potatoes type businesses, as I would call them, manufacturing and distribution in there as well. We tend to service kind of anything within kind of a 3-hour flight of Denver. And, transaction size kind of low end, about 3 million up to about 100.
Okay. Well, excellent. Well, then I think we'll just go ahead and jump right in. Aaron, out of every deal you've closed, not the biggest, not the cleanest, which seller do you think about, if you wake up in the middle of the night around 2:00 and you go, what did that one particular deal or seller teach you about what this work actually does to or for people?
I think there are a few, but the one that stands out, we were on a project, had gone into a situation where there were two partners. They had audited financials, and we went in, and in our world, audits are gold, right, or treated as gold. So we kind of trusted those, kind of went straight to market. In the early stages of due diligence, discovered that there were questions in there that we couldn't answer. This has been 10-ish years ago. There were questions in there that we couldn't answer, just questions from the investor at the time. And we couldn't answer it, the client couldn't answer it, their CFO couldn't answer it, their CPA couldn't answer it. So we opted to pull it off the market, and I spent the better part of 6 to 8 months on the road at their facility. It was outside of Colorado, every other week for a long time, just digging into their financials, trying to understand, how they accounted for things. There was one specific account that was kind of a catch-all. That was the crux of the problem. What we discovered was the audits were misstated, and that one kind of catch-all account was not overlooked, but just kind of swept under the rug, and the necessary diligence to uncover the true kind of accounting process relating to that one account didn't come through, and what happened was we ended up proving out that the audits were incorrect to the tune of, if I remember right, it was close to $4 million over 2 years on the bottom line. So that obviously affected our process and affected, the client. We had good news and bad news. The good news was, we were able to kind of capture that and discover it. The bad news was it created a taxable event for them. But, in the end, we got the deal done. Client was super happy. We're still, friends with them, close to them, and they were very thankful. So it was a lot of additional work, but I think that's what jumps out at me. It was one of the larger kind of learning experiences that I had in terms of knowing what to dig for and knowing what to look at when it comes to financials and asking the right questions. And, you get burned. We've been burned a handful of times, right? But the good part about that is you learn the lesson once, hopefully, and you don't make the same mistake again.
Well, it sure lets you frame that kind of experience both in your mind and when you're talking to a potential client. Says we don't want to do this thing.
Right.
For sure.
Right. Yeah.
When you or your firm put a number on someone's business or their life's work, what happens in that room when the market numbers don't match what the owner thinks the company and by extension their life's work is worth?
Yeah. I think what you're alluding to is kind of the valuation gap, right? On the front end, and I mean, I was just asked this question this morning on a separate call, about our process and the steps involved and so forth. On the front end, we're looking at financials. We're trying to understand the operation. We're asking all the questions about, what's buried in the financials, what are their accounting processes like, all of those things. But really to try to kind of understand, okay, what is the true profitability of the operation? Once we dig into that, we have a pretty good idea on where multiples fall, what those ranges look like, depending on size. I mean, it depends on a number of things, right? Size, dollars wise, employee wise, management structure, geographic reach, customer concentration, products and services offered, if there's any IP associated, all of those things come into play. So it's in any case, they're all unique. And that's one thing that's tough for some people to understand is, they might have a great business, but they're 100% project based and in a cyclical industry, right? But because they've heard the stories of, well, my buddy, sold his company 4 years ago for some astronomical number or big multiple, and whether it's accurate or not, it's kind of like big fish stories, right? But the market is always changing too. I mean, it's changing based on, everything, interest level, just economic cycles in certain industries, interest rates, you name it, right? And certain industries go in and out of favor a lot of times. So you kind of have to stay up on that. And I feel like we do a pretty good job of that. We also are pretty well connected in the investor space and the buyer space. So we have conversations daily with folks just about what they're seeing, what's going on in the market. That's all kind of background information to get to your question, which is what happens when the valuation expectations are different. And we're very upfront with folks in terms of our take on the market and where we think valuation falls. In every case, we want them to maximize their value, right? In every case, that only helps us. We're 100% success fee driven, so it helps everybody involved. But we're big on setting expectations throughout the process, and we're not going to tell somebody that it's worth 7 times when it's worth 4 times or whatever. So it's having that frank conversation and truly trying to educate them as to why, right? All of those pieces that come into valuation, that I mentioned, uh, a lot of folks just don't understand or appreciate all the nuance that comes into that. So it's about the education piece, and sometimes you get people that are agreeable to that, and sometimes you get people that are pissed off and they leave and want to go to the next guy who's going to tell them it's worth 7 times when arguably it's worth 4. And ideally, right, we'll give them a range, right? It's somewhere between 4.5 and 5.5, or 4.5 and 6, or something like that. But here's why, and here's where it's going to be 4.5, and here's where it could be 6. I don't think it can get to 7, but if it does, that's great. But are you okay in this range? And that's really kind of how it's framed. And oftentimes, folks understand that, and in other times they'd rather get told a higher number and go on. But it also depends on the goals. Like, every deal is different, right? So depends on the goals of the business owner, what they're looking to do. Some are looking for the highest dollar. Some are looking to, find the best partner to help them grow. Some are looking to, protect their employees at any and all costs. And the dollars are usually close, but some looking for the highest dollar might not be the best partner, and we've certainly seen that over the years too. So there's a lot of nuance with it.
I think it's hard for the business owner to view their business through a buyer's eyes. I think it's often difficult.
Sure. Yeah. It's stuff that you don't want to see, right? It's like anybody, judging you personally or me personally from the outside. It may be right on point, right? But sometimes it's tough to hear, but that's the old saying, the truth hurts, right? So.
For you and through the years, have you ever walked away from an engagement because, maybe the company was sellable, but maybe the owner wasn't? What did you see in that circumstance if it occurred, and what, if anything, could you do about it?
Yeah, we have. It hasn't happened very often. I mean, I can count the number of times on one hand, and arguably probably 3 fingers or less. In those instances, it's a matter of the owner either being just kind of overly difficult, and that could be anything. Like, we just can't obtain the information, or they're not communicative, or they're very argumentative, or any of those things. And so, unfortunately, we've had to kind of draw the line and say, look, I don't think this is something that's going to work for both of us. That's the luck to you. And that's okay, right? But that's the reality of some of those situations. But like I said, that doesn't happen very often.
Yeah, that's fortunate that it's a rare occurrence for sure. Yeah, for you, and you get up to the closing day. Walk me through the closing day from your seat. You've been working on the deal for a year or so. The wire clears. What happens in the next 48 hours for you and for the seller?
Yeah. Good question. There's a big sigh of relief, of course. There's leading up to closing and kind of the last, 3 weeks, and especially the last week, or maybe 3 to 4 days. It's pretty exhausting on everybody involved. But once you get there and it's finally done, there is a sigh of relief. I can speak from our side, or certainly from my side. I tend to, just kind of do my best to decompress. There has been certain times where I remember one specifically on a deal that we closed about 5 years ago, and it was done, and I just went to go play golf, and I went by myself, and nobody. It was the middle of the day and a weekday. nobody was out there, and I was playing barefoot, and it was one of the most enjoyable situations, just kind of relaxing, just like a feeling of accomplishment, that kind of thing. I will tell you that while certainly the money, there's the financial aspect of it, and the money can be good. It's not always great, but it can be good. But I will tell you, I rarely think about the money after that. It's more about got the deal done. The client is happy. We got another tombstone. It's kind of another one in our quiver, if you will. And they all have their unique situations throughout the deal. So there's a sigh of relief for a number of reasons on our end. And then honestly, it's, I'm not kidding, and my wife will say the same thing and give me a hard time. And the founder of Citadel, Chris, he was always the same way, and I totally understand. And he, it's like when a deal's done, it's like, okay, enjoy it for 24 hours, go play golf barefoot or whatever you're going to do. And I'm not kidding. 2 days later, it's where's the next one? What are we doing? What else are we working on? And then you're back at it. So it's not I'm going to take a month off or a week or whatever. It's never been that. So it's back on, and what else do we have to work on? From a client standpoint, I can say just from what I've observed, there's certainly that oftentimes there's that relief of the process. I'd say probably 7.5, maybe 8 out of 10 times the exiting owner is still involved in the business at some level for a transition period, right? And so they're kind of back at it. They might have a couple of days, and then they're back at it. And now they're working with, the new team on integration stuff and everything else. But I think they're relieved. Some of those that are, kind of completely out, definitely a sigh of relief. But also a feeling of, shoot, what am I going to do now? And that takes a little bit, I think, to get there. But that absolutely comes with many of them. And, they'll start something else or get into a different business or, start, investing in real estate or whatever. Not everybody just, sells and now they're sitting on a pile of money and they're like, okay, I'm going to go play golf every day or go fishing or, buy a boat and, sail to the Caymans or whatever. That doesn't happen very often. It's because if you think about it, all these folks are operators, right? They've built their worlds and their personalities and just everything. They're a lot of times just their ego and self-worth and not in every case, but in a lot of cases. And so it's a difficult, it's a difficult process to go through. It's a relieving one. And at the same point, it comes with a different set of challenges.
In thinking back, have you ever had a seller call you weeks or months after the close, not about the details, not about the earn out, any of that stuff, but because they were having challenges unraveling and you were the only person that was really familiar with what they'd been through?
Yeah. Yep. I've had conversations like that recently, which is to say in the last couple of years, and it varies, right? But I've had multiple conversations like that, and it's man, I'm just struggling with this or that, or trying to wrap my head around this, or what do you think about, I'm contemplating getting into something else, and that sort of thing. So yeah, and to be perfectly honest, oftentimes we remain friends or certainly friendly and close with a lot of our clients, and that's just I feel like that's one of the biggest compliments that we can get, right? To maintain those relationships post close years after, where we're getting Christmas cards and sharing Christmas cards with, folks that we helped, 10 years ago, right? So that's a meaningful piece of it too.
And to that end, you're the closest confidant to that owner for 6 to 12 months. And they tell you things that they may not have even shared with their family, their attorney or their CPA. Typically, if they're confiding, what do you typically hear, or what do they reveal to you about how they're experiencing that transition?
The transition during the process or post? Or just kind of throughout the whole thing?
Yeah, I'd say just during the journey.
It's an emotional roller coaster, and anybody that tells you different is lying to you. Especially for these, founders, owner operators that have spent decades in their business building it up. But it is extremely emotional. It's like, selling off their kid, which of course they would never do, but in this case they are doing it to some degree. And I've seen people that get skittish and at various stages, right, of the process. And honestly, it all comes down to, like, look, at the end of the day, we're not going to press them on it. We want to help them navigate it as best we can, but it's their decision, and all we can do is be a resource for them and kind of bring them back to, okay, when we first sat down 2 years ago talking about doing this, what were the reasons why, right? What was important to you then? And what's changed? And because stuff does change. But let's get back to that. Was it risk? Was it I need to spend more time with my wife and kids? Was it, I want to travel more, or health isn't where it needs to be, or whatever, right? And things change along the way, but more often than not, coming back to that kind of realization of, yeah, that is why we were doing it, and they just need assurance that, no, you're on the right path, and you are doing this, and there was a reason, and you can't listen. Everybody's going to have an opinion, right? If they're talking to other people or they're talking to other, i.e. like CPA, financial, what have you. Everybody has an opinion about it, and especially when you're talking about a large transaction or any transaction. It could be not necessarily large. I'm not talking, it doesn't have to be, large for somebody might be $3.5 million. Large for the next person might be $80 million. So it's all relative, but it's a big deal for them, and so it's really just kind of trying to recenter them back to why they went down the path to begin with. And sometimes, and sometimes they bail, right, at the end. I mean, we've had that happen too. 11th hour, no, we're not doing it, and that's frustrating to say the least. But at the end of the day, it's their decision, and you can't fault them for that.
Along those lines, is there a seller that that's creeps up periodically in the back of your mind, not because the deal went south, but you wonder what happened to those folks, after? Did they drop off the map? And you just go, geez, I wonder.
Yeah, I mean, there are certainly plenty of those that, that we've helped through, a transaction, and that we don't stay in touch with anymore, and not necessarily on purpose, but it's just, they go on to live their lives, and we're doing the same, and that's just life. There are certainly a few that kind of jump out that, we had a really good relationship or a long relationship, right? Deals that took years I think the longest deal that I was a part of anyway took us 5.5 years to get to closing. And that's 5.5 years with tons of travel, tons of everything, lots of back and forth. We saw them through ERP conversion, cycles in the market. And, but so like situations like that, you get to know people really well over 5.5 years and really kind of working through them. And, but patience is the key. And we've always said, and this was something that Chris had always said, like, we're very patient people and we have to be. We can't be in a rush. And honestly, sometimes the market, well, not sometimes, the market drives the activity level, right? And when I said some things go in and out of favor because of cyclicality or otherwise, that's real. And so the owners, have to understand that. But we're very upfront with that, and we talk about it a lot, and that's part of our early stage process, making sure that they understand what it looks like, what it could look like, that sort of thing.
If every seller that hired you guys was already prepared, but not for the deal, but for the life after, what do you think that preparation would look like? And what would those sellers understand that many of the sellers that don't do that work don't understand?
I think it would make the process, I think it would help the process by making it easier for them, right? It just emotionally more than anything. But also, it also helps in the marketability, right? I mean, when we're talking to a prospective investor, and we get on an initial call or have an initial meeting with the client and the investor, it comes through in conversation, just their confidence level, their certainty, all of those things, right? They know kind of where they can already kind of put the vision there. They know where they're going to be. They're not there yet. They'll get there, and not a dollars thing, not a necessarily a timing thing. They just know that they will be there at some point, and they've prepared themselves for it. And so it absolutely helps. It just improves clarity all the way through.
You've seen, we've talked about a number of the issues in the close and transactions. Tell me about the best post-exit outcome that you've watched. Closed clean, transitioned well, seller adjusted well on the other side. What made that particular transaction different, do you think?
I mean, it's hard to pick one. There are unique circumstances in every single deal.
Mm-hmm.
But I think I'll just pick one. I think the expectations were set for them, right?
Okay.
This is a family business. Part of the family remained with the company post close. The patriarch exited, but the expectations were set, and everybody was on board, and everybody was happy, with the result, and they were happy with the partner. But were there still challenges? Absolutely, because it's new, right? You don't own it anymore. So that's always a challenge. But I think in the end, everybody was happy. It met the goal of the collective.
And some of those sellers, when they close, and you can see that they need help. It's not the legal, not the tax, but some kind of help with life after. Where do they usually turn to for support to help them?
That's a great question. I don't know that I can answer that. I mean, I know that I've had plenty of conversations with clients post close, But and kind of go back to your earlier point about, we were so close for so long, talking daily for a year, right? And certainly talking multiple times a day for the last month kind of leading up. So understanding that challenge, we stay in touch with them, but in terms of their own, outside of, business relationship, that kind of thing. I mean, I think it's friends and family and spouses and, other, cohorts, friends that have exited or just retired or whatever, right? That's tough to say. I mean, I'd be
I think
guessing.
There's a gap in that world, and, part of it, I don't think the owner necessarily knows that they might need some help. And two,
Yeah.
I think they go, I need some help and I don't know where to go.
Mm-hmm.
I think that's maybe a gap in what's out there.
Yeah. It's interesting because actually when I started at the firm, we had that person who is an amazing person. And that was her primary role, was to she had kind of an HR-ish background, just like human capital background, right? And so she would kind of help on the front end with transition and kind of helping them talk through that, help on the back end with integration and follow up and, the equivalent of like an exit interview kind of thing. So we used to have somebody on staff that actually did that. But I don't know all the details as to kind of what happened, or if it just kind of fell out of favor or what. But no, I absolutely think it's a necessary role. At least having the option, right?
Yeah. My sense of that is, what kind of skill sets do you need to have in order to be qualified to have the conversation? If they're not really involved in the deal flow, they really don't. I don't think they're intimately familiar with some of the challenges internally,
Mm-hmm.
to resonate with that owner. And you keep saying, every owner is different,
Mm-hmm.
and some may receive it well, and some may not receive it at all. And so I think that gap continues. For you've been doing this a long time, and you have God knows how many hours of in the trench experience. And so you'll know things about the process that most sellers or many sellers won't know until it's too late. So if you could take and grab every first time seller, and say one thing that nobody in the deal stack would say, what would it be?
That nobody would say. I don't know that I can say that, because I think there are a lot of good advisors out there that would prep folks properly, right? There are also a lot that don't. There are a couple of things. I would say the biggest thing is cleaning up financials as best you can, just making sure that they're, everybody wants them to be, GAAP compliant. And we all know that, the lower middle market, oftentimes they're not, right? And at the same point, it's hard to argue with, because you have business owners that will want to, that utilize their business for, tax advantages, right? Which is perfectly fine, and that's well in their, reasoning to do so. But understanding how to account for that, separate that stuff out, just making sure that numbers are clear, being able to report down to the gross profit level at a minimum. If you can report all the way to the bottom line by division or by product or by service or what have you, that's going to be very helpful. I think along the same lines, financials is understanding working capital and what that looks like. And if you're not talking about working capital on the front end of a deal, and I'm talking like pre-LOI, it could be actually, when you've received indications, or maybe you have a couple LOIs, kind of on the table, whatever. That's something that we always push for, right? Is a definition of working capital on the front end. So let's agree to this, because that is the number one thing that sneaks up in the end, in the 11th hour, when you're trying to get it closed, and it's the back and forth push-pull situation where working capital is a big negotiating piece. And so establishing that, it's setting expectations, right? If you set it properly on the front end, you don't have to worry about it on the back end. But that's also why I think it's important to have an advisor in your corner, because they can help you walk through that. What does that mean? A lot of people they've never even heard of working capital, right? And they don't know how that's part of it. The other piece, unrelated to financial, is that we will tell folks kind of early on, or if we're doing a talk or whatever, is you have a lot of people that want to sell, and they think that it's like selling a house, right?
Mm-hmm.
Well, somebody's going to list my business on XYZ website, and there's this pool, like an MLS pool, and people are just in there choosing. Now, there are those, of course, we know what those services are. We don't typically use those, but the important thing to understand is timing. So if a business owner is looking to be retired in, say, 2 years, say they're 2 years out, that's always the pushback, right? It's the, I'm a year out, I'm 2 years out, whatever. Okay, well, let's back into this really quick. We're going to start talking. It's going to take us no less than 2 months, if we're moving pretty quick, to get material to where we could actually go to market. And then you go to market, and that marketing process can take anywhere from 60 days to years, again, depending on the market. But on average, call it 60 to 120 days. From there, then you're dealing with indications, offers coming in, negotiating LOIs, picking your horse, doing management meetings, trying to find the right partner. That process takes 2 to 3 weeks minimum, so call it a month. Now we're already in, before we've even gotten to a signed LOI, we're in 6 months, right? And at a minimum. And then you've got, no less than 60, probably 90 days in due diligence. That's quality of earnings, that's legal, that's going through all the stuff before you're at closing. So you're already at a year. Oh, and by the way, you will likely have to stay on for a period of time, right? I mean, I'd say on the low end, sometimes it's a clean exit, sometimes it is. But I would say that's, maybe 15% of the time. But they'll likely have to stay on for no less than 90 days. Maybe it's somewhere between 90 days and 6 months. And oftentimes it's a year, it could be 2 years if they're kind of key to the business, right? So you think about that. You're a year in the process, no less than 9 months, say 9 to 12, 9 to 15 months in the process. And then you got to stay for another 6 to 12 months minimum. You're already past 2 years today. So to be done, right? Like feet up on the boat or play golf every day or whatever.
I've been an enduring fan of business owners. I'm a business owner. You are too. And they're really good at what they do. Just niche down. They're good at it. But the things that you just described on backing into the exit time frame, I think there's a fairly large gap in expectation or knowledge or pre-framing. I just don't think they know.
Yeah.
Yeah. They
don't know, and it's really difficult. And number one, why would they? right? Unless they have somebody kind of coaching them through that, or they're very forward thinking, right?
Yeah.
But unless they have somebody coaching them through that, or I should say, and when they're not aware of that, and they think like, okay, I know it's going to take some time, but I can last 6 months. So going back to your original question about if somebody were prepared, right, for their exit, how much easier would it make the process? This timing discussion is exactly that. Because imagine how much easier it would be if they already know they're going to be here and they're comfortable with it, at X point in the future. We're not there yet, but then they're comfortable with the process, right? If they just think that they can sell this thing in 6 months and be out, they're going to be extremely emotional and likely very volatile. And naturally, right? I think anybody would. If you have this expectation and it's not going to get met, it's going to be very frustrating.
Oh, yeah. It's framed wrong.
Yeah, absolutely.
Yeah. Yeah. As you look back over the years, and, no need to name the folks, is there a seller that you closed years ago that you'd like to pick up the phone and just check in and see how they're doing?
Sure. I do it all the time.
What do you typically talk about when you do that?
Nothing. How are you? How are things? What are you doing? Where are you traveling? How's the family? How's the business going? Right? It might still have kids involved, or whatever. Just all the what are you doing with your time? When are we going to see you next? Can we get together to play golf? Are you coming through Colorado? Whatever.
Yeah. It's for all of this, I hope that the founders and business owners and so on, one can use this as a resource, because I appreciate your candidness, and your insights into the process and, clearly your experience. And, there's so much lopsided focus, I think, on the pre-transaction, pre-wire timeframe. And, there's an emerging recognition of the gap on the other side, which we've referenced in here, and so, I think these conversations really have value. I hope the business owner, that may run across this pre-exit, I hope they find this useful. The transaction is kind of the finish line or close to a finish line. The transition that happens, at that time frame, that's not exactly a finish line.
Mm-hmm.
That has some duration to it. So, I appreciate your time. Aaron, if somebody would like to reach out to you, where and how do they find you?
Yeah, the easiest way is just the website, probably, which is citadeladvisory.com. They can check us out. We have tombstones listed on there, kind of walk through, basic website stuff. But on the contact page, you can book an appointment. There you can call me, or numbers are on there, emails are on there. So yeah, absolutely. We're pretty, we try to answer the phone. We're still old school, which is, yes, we can respond via text and the whole deal, and will, but it's the age of Zoom. I was having a conversation with somebody yesterday who's not in Colorado, and the age of Zoom, while super convenient, there's a lot missing, and there's so much more in person, and just like there's so much more via discussion on the phone rather than text, email, what have you. But no, we're easily accessible through the website.
Well, super. I think about the body language that you pick up when you're there versus the body language you don't pick up when you're not there.
Mm-hmm.
And yeah, like you said, post-COVID, yeah, Zoom's kind of the thing and convenient, but or they could go to the golf course and look for the guy playing golf barefooted. That
right.
guy.
That's right. Could do that. Although that doesn't happen very often. It might happen a couple times a year.
Yeah. Well, I guess we'll sign off here. This is the Exit Series. I'm Bob Roark with my guest, Aaron McCambridge, Managing Director of the Citadel Advisory Group. You know, if you know of a founder that's sold, or a broker who's seen it, or an attorney that's been across the table, send them the episode, subscribe wherever you listen, and we'll see you next time. Aaron, appreciate your time.
Thank you, Bob. Happy to be here.